Ignore the noise. USD Japan quarterly chart is screaming a buy opportunity, and in today's video, we'll deep dive into the long trade idea, focusing on a key retracement to the 152 area, aiming for a significant move to the 177 area, which is actually a 1978 low. And by analyzing these quarterly bars, we'll uncover why higher time frames are crucial for spotting these game-changing setups. Stay tuned to learn how this approach can transform your trading strategy and help you catch these big market moves. Let's deep dive. We start off our analysis on the quarterly chart. Quarterly chart is basically the 3-month chart on your trading view. If you go to time frames, just scroll down, you'll be able to see on the months and the days, you'll see a 3-month chart. That's basically a quarterly bar chart, yeah. And as you can see, the price action that has been setting up here clearly on this chart, that of a breakout, and it's a breakout that is in line with the dominant order flow, which is bullish. We do have a clearly defined level around 152. It's clearly defined because we see 2 touches of that level, and you see this breakout. I love this breakout because majority of this candle body is actually above the breakout level, and prior to the breakout level, we did see weakness, or rather bulls being willing to actually buy this currency at higher prices. What do I mean? See the first touch, look at the sell-off. Second touch, look at the sell-off. Not as aggressive as the first one. And you can see bulls clearly reversed this bearish momentum and proceeded to actually close above the level. Once price clears a level, you ideally want to mark it and look at it as your next area that you expect price to touch before it continues in its trend, yeah. So on the quarterly chart, price is yet to retest the 152 area, and if it retests and this level actually holds as support, we might actually see a move and a continuation of this uptrend that has been in place since 2012. We might actually see it move to the 177 area. 177 is this low, and this low was formed in 1978. This is a chart from FXCM. So it'll be interesting to see how price reacts around the 152 in the event that we get a retracement on the lower charts. I'm sure on the lower charts we've already had a one retracement, but I'll be looking at least on the quarterly bars to see a move towards here, hold, then target 177. That's basically a summary of the trade idea and how it's actually setting up on the quarterly bars. As you've seen, we have clearly identified the support around 152 and a clearly next resistance area around 177. And actually, we want to take you through a head and shoulders pattern that led to these uptrend that you're seeing. Let me just grab a pen tool over here. As you can see, this is the left shoulder of this pattern. Then we get the head, then we get the right shoulder, and eventually we do get the breakout. We did not see a retracement to the neckline as usually for such patterns, but price has been bullish since. As you can see, we have price action that is actually supporting a continuation of the bullish momentum. And within this price action, we still also have price patterns. Price pattern within price patterns. You can see we had this triangle pattern. We broke and continued to be bullish. So clearly everything is screaming bullish from the higher time frames, and I would like to scale down now to the weekly chart so that you can look at a more granular view of this market. Still the same premise. As you can see now, the 152 is clearly defined. This is basically what you're seeing on the quarterly chart, and as you can see on the weekly, we actually retraced 152. This one was more of an intervention by the BOJ, Bank of Japan, but I'm still supporting my bias that 152 is a crucial area, and as long as we retest this level, I'll be bullish. So every subsequent touch of this 152, I'll be buying, yeah. And as long as we are above the 152, my bias is bullish, and as you've seen, my long-term target is actually the 177 area. Scaling down to the daily chart, which is actually a time frame I spend a lot of time on, you would see there's a lot of noise. Let me just call it noise. Why? You can see I've done a trend line from this low that was formed in December 2023, clearly showing that the momentum was to the upside. This trend line has been broken. It was broken on Wednesday, signifying a change of momentum to the downside. And as you can see, I think we did have release of, was it CPI data? And I think we did see the BOJ also intervene again in the markets and drove the pair down. So my expectation for this coming week and the subsequent weeks, as I wait for a move towards the 152 area, is that the short-term trend is actually bearish. Look at these bars. Look at the range of these bars comparing to this up move here. You have this one bar that has completely engulfed all these bars. 1, 2, 3, 4, 5, 6. More than 10 days of price action has been engulfed by one bar. Clearly, this is a significant shift in momentum. Ideally, you don't want to chase such moves. You ideally want the market to cool off. Ideally, to give you an idea, a setup like this where it cools off, basically forms a consolidation pattern, then that pattern breaks, then you ideally look for retracement to that pattern and you target a move towards 152. But basically on the lower time frames, you're seeing the momentum is shifting to more of a bearish, that at least on the short term. I'm looking at the most recent price action, but overall, as you have seen from the quarterly bars, this pair is on a significant uptrend, and this actually shows you the importance of higher time frames. The higher time frames will always overshadow whatever is happening on the lower time frame. Whatever you trade on the lower time frame should be in the context of the bigger picture. So ideally, if you're shorting the USD Japan based on the current price action, do not attempt to probably target lows around 140 or 141 rather. Why? Because you've seen on the higher time frame, we are bullish, and this 152 will be a significant impediment, significant support area for you to look out for in case you're shorting this for the long term. You can short it for the short term based on the lower time frame charts. As you can see, the lower time frame, clearly the order flow has shifted to more bearish, but me, I'm taking it as a retracement, and I'll be waiting for a move towards the 152 area where I'll be looking to buy this pair, guided by the moves that I'm seeing on the higher time frame, which is a quarterly bars. On risk reward, if I was to pull my risk reward tool, purchase it around 152. Ideally, you want to look at the last, if you look at the last bit of resistance prior to the breakout, that's where you ideally want your stop loss to be, just below that consolidation. And if you was to target, as you've seen, let's go back to the weekly, just target the 177 and go to the monthly. Be able to see this on the higher time frame charts. Let's target these. You can see now how it's setting up on the quarterly. My stop loss is below that quarterly bar, which is a good place to have your stop loss here. Because ideally, when price goes below that low of that most recent quarterly bar, then ideally you want to negate your bullish bias. As you can see, the total R is around 14. Now imagine you'd risk, if you risk 5%, you'll be making more than 50 R in one trade. And this is a trade that is based off the higher time frame. So there's a high probability that this trade will actually work. High probability. Yeah. If you look at the probability, it's high. It's high that there's a high chance of this trade actually working out. If you don't want to place a limit order right at the level, what you can do is you can wait for price to touch the 152. Then you scale down to somewhere like the 1 hour and you watch how price actually reacts around the 152. If price on the 1 hour comes, touches 152 and shows you signs that it actually wants to continue the upside, you can now trade based on the 1 hour price action and target the 177. That way the market will have given you confidence that 152 is actually holding. But for me, I actually like to trade as price is touching that level. Don't be afraid of seeing these bear bars. As long as your trade idea is supported by high time frame charts, trade it. Over the long run, I'd assume if you're trading based off the high time frame charts, 80% of your trades will be working out. Trust me. If you are making money 80% of the time and losing money 20% of the time, and you are making huge returns like the 13, your 10, and you're risking around 3%, you're making money in the long run. Yeah. And the reason why I'm quoting the 3%, the 5%, risking 5%, risking 2%, is because this trade is based off a higher time frame chart. If it was based off a daily time frame chart, like this breakout over here, if I've seen this on the daily, I'd just risk 1%. But for me, the higher the time frame, the more the more convincing the signal is. And if you are to take anything out of this video, is always use the high time frames in your analysis. You can combine different trading strategies. You can do swing, you can do day trading, you can do position trading. Because because you can, let's say, assuming like this breakout based on the daily, you can swing trade this. If initially you had seen the quarterly bars and you'd seen this idea, you'll probably be holding into this as a position trade, yeah, long term, and looking to add more as it approaches this area. Ideally, you'll have taken your profits after price broke some of these areas, yeah, but that should not worry you, because of over the long run, as you've seen, this price is actually bullish. So as long as it tests the 152, keep on buying. I hope the video has been informative. Look forward to engaging with you in another video. Thank you.